Good morning, everyone. Welcome to Officers Adda 24/7. My name is Niharika Valia, and I'm here with you for JAIIB AFB. Okay, so I hope I'm audible as well as visible. So let's proceed. A batch for the JIB has just begun. That is, this is just starting on 16th of August. So if you haven't reviewed our portal yet or the website yet, then what you can do is kindly go through our app as well as our um, our website for further details regarding the JAIIB examination. And at this point of time, you are getting a particular discount of up to 81% if you go ahead and look at our batches. At this point of time, we are giving you a discount, and you just have to use the code Y541, and you will get the JIIB at a very reasonable price and after deducting a discount of 81%. So basically, the batch has just begun where it has started on August 16th, where the timing is 8 a.m. to 9 a.m. And the target batch has basically started where we have PPB, AFB, and LRB for the English medium batch, and the timing for AFB is 8 to 9 a.m. So kindly check it out. For further details, you'll find live classes along with You'll find live classes here. They're recorded as well. So along with that, you also get test series and you also get ebooks. So if you would like to review it, then I think this is the perfect time because you'll be able to attend the live classes as well. Since not many of the live classes have been done. Good morning, sir. So let's proceed further. This is the first question for the day. Which one of the following equations correctly expresses the relationship between the assets, liabilities, revenue, expenses, and capital? Among the following, which particular equation provides the exact equation? If we talk about accounting equation, considering the fact that you'll also have to fit in the point of revenue here. We'll have to put the point of revenue as well as expenses in your accounting equation. So basically, the counter equation is whatever capital you have and uh, whatever liabilities you have. Excuse me. Whatever capital you have got and whatever liabilities you have got, both of these things, when added together, basically what happens is if I start a business, I put my own money, and sometimes my own money is not enough. So that means I need more money from other people. I'll take money from other people. And then after taking money from other people, what will I get? Capital plus liabilities is basically the assets for the company. Now, once this company has got its assets, it is now using it in the business. Now, the point is this one is sorted. But what about the revenue and the expenses? When we talk about the revenue and the expenses, it's basically a part of the capital there. If the organization makes a revenue, it is added. If the organization makes an expense, it is subtracted. And whatever profit comes, again, that goes into the capital account. So in this case, the correct answer would be what? That would be B. That is, assets is equal to capital plus liabilities plus revenue minus expenses. If this turns out to be positive, that is, if it's a profit, it would be added. If it's a loss, it would be subtracted. And this particular thing is exactly done with the capital only. It's not written in a separate way. It's a part of the capital only. Right? This is the expanded form of accounting equation. Now let's move on and understand the next topic. The next topic or the next question is the equation is a part of the transaction analysis model. There's a specific equation which is a part of transaction analysis model. Is it the owner's equity is equal to capital plus retained earnings, or retained earnings is net income minus dividend, or net income is equal to income minus expense, or all of the above? A very basic question, but definitely this particular term has got many concepts in it. The transaction analysis model, this particular model talks about all of these. Basically, whatever the owner's equity is, that's because he has contributed capital and also has retained earnings. Now, the next point that comes is the retained earnings that we have today, whatever savings we have, that's because from the total income, a part of the income has been given to the shareholders as a dividend. Whatever is left is kept here. Then we have net income. Net income is what you earn, that is your income minus your expenses. And whatever you are left with is called the entire portion. Every part of it, that means A, B, and C, all of these are a part of transaction analysis model. Right? So now let's move on to the next question. During a reporting period, there's a company whose assets increased to by rupees 80 lakh. The assets have increased, the liabilities decreased by 20 lakh. Okay, this is actually 2 crores, right? This is 2 crores and that is 8 crores. So now the point is that there's an increase in an asset. Now the point is equity must therefore be. Now the point is there's an asset. The value has increased by 8. There's a liability which has decreased by 2. Now the point is, what would be the value of equity? If we talk about equity, the change in equity would be, if this is the point, then the equity is going to be increased because this 2 lakh which is basically decreased, that means this is negative here. Once you take it to the opposite side, that is, once you cross equal to it would turn into a +2. That means in this case what will happen is there is an increase in equity if the organization has bought more assets. If the organization has paid off its liabilities, that means it is having enough money in their own pockets so that they can purchase more assets and at the same time they can pay off their liabilities. So in this case, the correct answer will be increase by 1 crore. Right? This is for the equity. Now the next question. Errors committed by missing out on recording of entries totally in the journal book is called. Sometimes all the entire entry, the entire transaction would be missed out and will not be noted totally. So if such a thing is not happening, तब क्या होगा? What would happen in that case? Will it be errors of omission, error of commission, error of principal, or none of these? In the particular area of rectification of errors, when we talk about the rectification of errors, if a particular transaction is completely not recorded, that means it is omitted from the books of accounts. So that means this entire transaction is not recorded. Will this cause a trouble in the trial balance? What do you think? Will there be a mismatch because of an omission? There won't be, because a particular entry is neither noted on the debit side nor on the credit side. The entire entry is missed out. If the entire entry is missed out, that means we are done with it. There is an omission. So there will never be a chance where the trial balance will not match. It will match. That's why these kind of entries are hard to catch. Okay. Now the next question. There's a bike that was purchased for rupees 800 for the son of the partner was debited to the general expense with rupees 80 in the rectifying entry drawings account debited with. If we are putting the rectifying entry, where will we put this amount? Let's talk about it. Now there's a bike that was purchased for some other partners and it doesn't matter. We have given drawings. So basically we would have given cash to purchase something. This is the correct entry or the entry that was supposed to be passed. But they have made a mistake and the mistake is this would be right now a general expense. Right? It would be a general expense to cash. And that too rupees 80. So currently what I can see here is there's a general expense which should be cancelled out, and at the same time there's not an issue with the cash, but there's an issue with the general expense altogether. What should we do now? They're asking you what would be the rectifying entry. This is a problem and this is a problem. So basically, once we rectify, we will write whatever we are supposed to in terms of the debit side. The correct entry has to be inculcated. Drawings has to be recorded at 800. And this general expense has to be cancelled out. Why is it written? This particular term, it doesn't have any existence in the books of accounts. It doesn't have. So this 80 rupees has to be cancelled out. Now once we cancel out this 80 rupees, what about the remaining amount? Because there's no other place where I can find out that there's a trouble. So what will I do here is, in this case, what will I do is to suspense. And that would be 720. So now can you see the rectified entry? This is the rectified entry. So the correct answer is C. 800 would be debited because they are just asking about the drawings, nothing else. An unadjusted balance in the cash book is because of the result of which error? If there is an unadjusted balance in the cash book, is it because of deposit is in transit, or there's some omission in the bank charges, or okay, there are multiple areas in this particular question. The question says there's an unadjusted balance. There is a balance in the cash book. There's something that is there in the cash book which is not recorded. But the passbook says I have recorded it. Is it deposit in transit? We know about the deposit in transit, but the bankers have no idea about it. Why? Because we'll have to go and tell about it to the bank first. So in this case, one thing is sorted. There won't be a deposit in transit that would be noted because we know about it. The cash book has already recorded it. The outstanding checks, that means we have deposited this check in the bank, but these are not cleared yet. That means this will not be recorded here too. And then comes the unpresented checks, the checks which have not been cleared from the side of the people. If I issued a check for you and you didn't get it cleared, from my side, I've already recorded that I've given you the check. Probably the payment would be made soon. So basically, this is also recorded. So all these things are already recorded. Only the bank charges, that's something the bank tells us. We have no clue whatever the bank charges we would have paid. So the bank charges is the only thing which should be recorded here, right? So the correct answer is the omission of the bank charges because the bank knows about it, but our cash book doesn't. Seventh question. The balance shown in the cash book is at 10,000. The checks issued but not presented for payment rupees 4,000. Check deposit but not yet collected is 3,000. Balance as per passbook will be 9,000, 10,000, 11,000 or none. This is bank reconciliation statement. The balance as per the cash book was rupees 10,000. This is balance as per cash book. Cash book realized that there are certain checks which the cash book has issued. The cash book has been thinking that 4,000 is already deducted. But the passbook said, I have no clue about this because there is nothing like that that has happened now. So since the cash book balance is given, it has to run towards the passbook. This cash book balance wants to go to the passbook balance, isn't it? Now once they are moving from cash book to passbook, what will we do here? Now, this 4,000, this is check issued but not presented for payment. This 4,000 is not presented yet. That means if we have thought that we have lost this 4,000, we haven't lost it yet. This person hasn't take out the money yet. So here what we do is the passbook says there is nothing like that. We'll cancel out this transaction. The next point is check deposited. Now the cash book thought that I have deposited 3,000. I am really happy because I've got more money in the bank. But the passbook says no, there's nothing like that. So if the passbook says there's nothing like that, we'll have to cancel out this transaction as well. So if it is positive here, we will cancel it out by writing a negative of the same. So there it would be 10 plus 4 minus 3. So there the correct answer would be 11K. Let's move on and look at the next question, question number 8. In the balance sheet prepared under Schedule 3 of the Companies Act 2013, there's a particular head called Share Application Money Pending Allotment. It should be shown under Shareholder Funds, under Non-Current Liabilities, under Current Liabilities, or as a separate line item. What is share application money pending allotment? Basically, when we receive application money and maybe the end of the year has just arrived. So if it's the end of the year and there is 31st March is there and we are not gonna create a fuss out of that at this point that at this point of time we need to allot the shares right away. There's no fuss about it because if we do it in a hurry, there would be a trouble. So the companies, what they do is by the end of the year, they put the application money pending allotment in a specific item. Whatever money they have received right now, that would be shown under allotment, application right now, share application money pending allotment. Later on, they'll shift it towards the share capital. So right now it's not share capital, but in future it will become share capital. Right? So in this case, it's basically a separate line item. It's shown under shareholder funds. There's a different scenario basically, but it is shown separately. Because at this point of time, we cannot put it in the shares. Na? It is not a share capital yet. So it is not exactly shareholder funds yet. It would be shown as a separate line item. And later on, Once we have allotted these people the shares, it would be moved towards the shareholder funds. This question is from the ratio analysis. It's from the operating ratio. Cost of revenue from operations plus selling expenses divided by net revenue from operations. Is this operating ratio? Or cost of production plus operating expenses divided by net revenue, or cost of revenue from operations? Then we have the operating expenses divided by net revenue from operations, and the last is cost of production divided by net revenue from operations. Operating ratio operating ratio can be defined as a ratio where we have the operating expenses. What do you mean by the operating expenses? It includes the selling expenses, but it also includes the um, administrative expenses. Admin expenses are also a part of it. So if we have admin as well as selling expenses, a part of the entire thing, so what will we do? So you will have to first of all write the cost of goods sold, or here it is called the cost of revenue from operations. Then in this we add the various operating expenses. Then we divide it by the revenue from operations. This is what we call the operating ratio. It's also called operating expense ratio. This is called operating ratio. If your operating ratio is say 75%, so what would be your profit if the area or the portion of 75% is covered with cost and the total is 100, because the percentage is always 100? So what would be the percentage of profit? It would be the difference between the two, that is 25%, right? That's question number 9 for you. Now the last question for the day. If a vendor if vendors are issued fully paid up shares, we have given shares to some vendors from whom we would have purchased something. So we have given fully paid up shares of 1,25,000 for a consideration of net assets. We have purchased 1,50,000. We have purchased, okay, we have purchased an asset of 1,50,000 from them, and we have paid them 1,25,000 in terms of shares, and rupees 25,000 will be credited to the paid up value of the share is 1,25,000, and nothing has been specified whether we paid in cash or something else. Is it the statement of P&L, goodwill, premium, or capital reserve? See, if we have given shares, we will have to give them shares up to 1,50,000 only. That means if we haven't given them in the share capital, this is the face value. The shares can be issued at a price more than the face value. When the shares are issued at the price of more than the issue price, that particular thing is called security premium reserve. So in this case, what has exactly happened is, once we purchase an asset, say we bought a building there. As soon as we bought a particular building, what they did is, the building was worth rupees 1,50,000. For this building, they have paid 1,20,000 in terms of shares. And nothing has been stated how it is settled. So if nothing has been stated how is it exactly settled, what we'll do is, whatever is left, that is 25 now, whatever is left is the 25,000 in terms of security premium. The shares will be issued at a price of more than the share price. That's security premium for you, right? So this is it. This is where I would like to end this particular class for the day. And if you're looking forward towards your preparation for this examination, JAIIB, AFB, or you're preparing for CAIIB as well, kindly check out, if there's anybody who's preparing for that, for the CAIIB examination, kindly visit our website so that you can go through the offers that are available for you. Let me show you what you can do in terms of going for it. Okay, so this is where you just have to go onto the website. Once you go to the website, that is Adda247 or .com. And if you can, if you would like to review this particular portal, what you can do is you can download the web app. In that case, you'll be able to have a better access of the entire Adda 24/7 app in terms of the working, the quizzes. There are so many things that are available, especially for JIIB and CAIIB examination. So there, it's in the banking area. Just click on JIIB and CAIIB. This is where you will find the November-December bilingual English medium batch. And once you go onto the batch, as you can see, this is the batch price, that is JIB 2022 PPB AFB LRB. So this is the entire batch that has been going around. The timings are specified. AFB class would be at 8 to 9. LRB will be 6 a.m. to 7 a.m. PPB will be from 9 a.m. to 9 p.m. to 10 p.m. So these are the three timings which are available, and at the same time, these are the individual batches which are available for you. If you would like to purchase the entire batch, there are overall 67 ebooks available. The test series is also available, and at the same time, the classes would be live for you. So these are the plans where you can find the details of all the lecturers who are taking the classes there. So kindly go ahead and check it out. So if I click on the area of buy now here, I just have to write Y541. At this point of time, the discount is available up to 77%. Currently, it's available at 77%. So you can purchase it at 3679. You've got an offer to look forward to. So just go ahead and apply the coupon code Y541 and avail a discount of up to 77% in this JAIIB examination batch, which has just started. It has just started on 16th. That means you haven't missed out a good amount of classes or something. You can still have your classes. Okay. Let me just give you a better vision there. So this is where you can look forward to the pricing which is available for you. So if you would like to purchase a JIIB course, or you have anybody who's looking forward to CAIIB, all you need to do is go to our app and find the details of the same. And you can also check out the details on our website for the further knowledge, and at the same time the study plans are also available, so you can also check out by what time the classes would be over. So go ahead and check it out on our website as well as the app. Thank you.